Well, as the tensions between the Government of India and the Reserve Bank of India have reached a boiling point, with the RBI Deputy Governor Viralacharya pointing out 3 areas of friction with the government. Now, the government, however, is holding its ground. Sources say that the centre has never interfered in matters of regulations, but has called on the regulators to be more accountable and open to ideas. In fact, we spoke to a slew of economists and former bureaucrats on the current tensions between the central bank and the government, and if it's reached a point of no return. Let's hear out what they had to tell us.
If Ministry of Finance really has concerns about the financial sector, it should quietly give a paper to the Reserve Bank of India as to why it thinks the situation is not as dangerous as RBI feels in terms of how much the corporate sector has borrowed and why certain select institutions should be shown greater regulatory forbearance. Ideally, I would think it should be a white paper which should be presented in Parliament so that you and I as taxpayers also know what exactly are the technical differences between the approaches taken by RBI and the Ministry of Finance, rather than it becoming in the media an issue of personalities as who's on the board and who's the deputy governor and what is the term and whether so-and-so will get an extension or not.
In my view, I think it would be useful to clean up the balance sheet in terms of the debt, government debt that RBI holds. I mean, this was a big issue again in our time. And at some point we stopped this forced lending from the RBI. One should be looking for a compromise solution. And let me just suggest to you one of them, which to me sounds completely reasonable. And this is one of the main points RBI has always made, is that now that after the GFC, the global financial crisis, it has shown that financial stability is an important thing for RBI, and if it has some of these things under it, the bank regulation directly under it, and same would apply to the payment regulator, it has more information, knowledge and expertise to deal with when the crisis arises.
What the RBI has in the past focused on is only the retained earnings, the 2.6 lakh crores, which it calls contingency funds and ADF, that which has passed through the P&L, and it tends to ignore the revaluation reserves. I think that's something which needs to be relooked at, but I completely agree with Dr. Virmani. So look, the point really is not that the RBI is holding back money and not giving it to the government. Yes, it's holding it back as capital, but on the other side, on the asset side, it actually has what, 6.5 lakh crores of government securities, which means it's actually lending the money it has in reserves back to the government. So, while it's not paid it out as dividend, it's actually lent it to the government in one form or the other.
The government has to see whether money, liquidity is available at that last level where it is required to be made available. And if that is not available, government has a viewpoint to say, yes, there is a problem, will you not be in a position to look at it? You see, you should look at the roles of both government and RBI from these two viewpoints. Government reflects the growth concerns and what is happening at the field level. RBI is equally concerned, but RBI has a much bigger objective to look at. So, when these two views are totally, absolutely okay, how to marry these views? That's a tension that is arising at this point in time.